American Express is often misunderstood as just a premium credit card brand. In reality, it is one of the most sophisticated financial systems ever built for high-value users. While most consumers focus on points and perks, Amex focuses on behavior, trust, and long-term value. This is why American Express attracts entrepreneurs, executives, and high-net-worth individuals. It is not about spending more money, but about structuring how money moves. Amex operates quietly, but its influence is deeply embedded in global finance. The company does not compete on mass adoption like other networks. Instead, it filters users and builds a controlled ecosystem. That design choice explains its power. This video breaks down how American Express truly works. American Express is both a card issuer and a payment network. Visa and MasterCard only process transactions between banks. Amex controls the entire transaction from start to finish. This structure is known as a closed-loop system. It allows Amex to collect richer behavioral data. Better data means better risk management. Better risk management means fewer defaults. Fewer defaults allow Amex to reward premium users. This creates a self-reinforcing system. That system is the foundation of Amex's advantage. In a closed-loop system, Amex sees the buyer and the seller. This visibility allows precise spending analysis. Amex can detect fraud faster than open networks. It can also personalize offers more effectively. Merchants benefit from higher quality customers. Customers benefit from tailored rewards. This dual insight strengthens loyalty on both sides. Data becomes more valuable over time. Competitors cannot easily replicate this structure. This is a long-term competitive moat. American Express does not want every consumer. It prioritizes predictable, high-quality spenders. Income stability matters more than income size. Consistent behavior reduces portfolio risk. Amex approval standards reflect this philosophy. This selective process protects the ecosystem. It also reinforces brand prestige. Exclusivity is not marketing fluff for Amex. It is operational risk management. That is why approvals feel different. Prestige influences how people use financial products. Amex leverages status psychology carefully. Higher annual fees discourage casual users. This filters for commitment, not impulse. Once inside, users behave more responsibly. That lowers default rates further. Prestige becomes a behavioral control mechanism. It aligns incentives without force. Few financial companies understand this dynamic. Amex has mastered it. Most premium Amex cards are charge cards. They require balances to be paid regularly. There is no fixed spending limit displayed. Limits adjust dynamically based on behavior. This encourages disciplined usage. It also reduces long-term credit risk. Users signal financial responsibility by design. Amex benefits from faster capital turnover. This structure suits high cash flow individuals. It is intentional, not cosmetic. The phrase does not mean unlimited spending. It means limits are flexible and algorithmic. Amex evaluates income, assets, and history. Spending spikes are monitored closely. Trust increases flexibility over time. Risk reduces it instantly when patterns change. This is real-time credit management. Few banks operate at this level. Users feel empowered but remain controlled. That balance is difficult to engineer. Wealthy users value timing more than totals. Amex allows short-term liquidity without loans. Businesses use Amex to bridge cash gaps. Payment cycles can be strategically aligned. This reduces the need for bank credit. Fees are predictable and transparent. That predictability matters at scale. Amex becomes a financial buffer. Not debt, but controlled leverage. This is a subtle but powerful use case. Amex rewards are complex by design. Complexity increases engagement. Users invest time learning the system. That investment increases loyalty. Points encourage spending within the ecosystem. Transfer partners lock users into Amex rails. Redemption flexibility adds perceived value. The system rewards long-term users disproportionately. Short-term users gain less. This aligns incentives perfectly. Amex points behave like a currency system. They are earned, stored, and exchanged. Transfer partners act like foreign exchanges. Value fluctuates based on redemption choices. Advanced users extract outsized value. Casual users receive average returns. This rewards financial literacy. Amex benefits from both user types. The currency never fully leaves the system. That is strategic design. Travel spending is high margin and predictable. It also carries emotional significance. Amex dominates premium travel partnerships. Lounges create physical brand presence. Airline transfers reinforce ecosystem lock-in. Frequent travelers rarely switch cards. Travel perks justify high annual fees. Fees stabilize Amex revenue. Revenue stability supports premium services. The cycle reinforces itself. The Platinum card is a filter. Its fee eliminates price-sensitive users. Its benefits reward lifestyle alignment. It attracts frequent travelers and executives. Customer service expectations are higher. Amex delivers accordingly. The card is not about flash. It is about segmentation. Segmentation improves profitability. That is the real function. The Black card is invitation only. It targets ultra-high net worth individuals. Spending alone does not qualify users. Behavior and relationship history matter. Service is personalized and discreet. Problems are solved by humans, not systems. This mirrors private banking. The card strengthens elite loyalty. Its existence reinforces brand hierarchy. It is symbolic and functional. Amex earns primarily from merchant fees. Premium customers generate higher transaction volume. Interest income is secondary, not primary. This reduces reliance on consumer debt. It also reduces exposure during downturns. The model is more resilient. Merchants accept higher fees for quality customers. This trade-off benefits both sides. Amex positions itself as a value provider, not a commodity processor. Amex customers spend more per transaction. They return more frequently. They have lower fraud rates. Chargebacks are less common. Merchants gain predictable revenue. Premium brands prefer Amex users. The fee becomes an investment, not a cost. This dynamic sustains acceptance. Despite constant criticism, Amex monitors accounts aggressively. Unusual behavior triggers immediate review. Spending can be frozen instantly. This protects the entire network. Losses remain contained. Premium users benefit indirectly. Security becomes a shared interest. Amex does not negotiate with risk. This discipline preserves trust. Trust preserves the brand. Amex tightens standards during downturns. It prioritizes capital preservation. Risky users are removed quickly. Core customers are protected. The network contracts intelligently. This happened in 2008 and 2020. Recovery was faster than competitors. The model is anti-fragile. Stress reveals structural strength. Amex consistently survives. Banks trust Amex data. Airlines trust its customer base. Hotels value its partnerships. Governments trust its compliance. This institutional confidence compounds. It enables deeper integration. Integration increases switching costs. Amex becomes embedded infrastructure, not just a consumer product. That distinction is crucial. The U.S. has high consumer spending power. Financial systems are mature and regulated. Amex thrives in predictable environments. Internationally, adoption is selective. Domestically, dominance is strategic. U.S. economic strength amplifies Amex's model. The card aligns with American consumption patterns. This reinforces its global influence. Amex exports standards, not scale. That is intentional. People do not just use Amex, they build systems around it. Expenses, travel, business, and protection align. The network rewards long-term participation. Leaving feels like losing infrastructure. That psychological barrier is powerful. Amex understands behavioral inertia. It designs for it deliberately. This creates lifetime customers, not transactional users. Amex is building a financial aristocracy, not in wealth, but in behavior. Fewer users with higher lifetime value. Deeper relationships instead of mass volume. Trust over speed. Control over chaos. This vision sacrifices short-term growth, but maximizes long-term resilience. Few companies think this way. That is why Amex endures. American Express is not about flexing status. It is about designing how money flows. The wealthy use Amex because it works quietly. It rewards discipline, consistency, and structure. Most people chase perks. The elite build systems. Amex understands that difference, and it has built its entire business around it. The real question is not whether Amex is worth it. The real question is whether you think in systems.